Hey everyone, did you know that interest rates on commercial real estate loans today are lower on average than they were last year when the 10-year Treasury fell to the 3.6% range? In fact, commercial real estate lending rates are lower today than they have been for a couple years. So what's been pushing commercial real estate interest rates down? To start, as expected, on October 29th, the Fed made their second 25 basis point cut this year. That took the overnight rate down to the 3.75 to 4% range. In response, the 10-year Treasury bumped up about 10 basis points to the 4.1% range. Now that's better than last year when the Fed cut rates by 100 basis points over the three meetings between September and December, and the 10-year Treasury climbed about 90 basis points. But last year in September, when the 10-year was at its lowest, commercial real estate interest rates were running from the low 5% range for agency multifamily debt up to the upper 6% range for bank lending on commercial properties. And that dip in interest rates last year boosted commercial real estate transaction activity in the fourth quarter by over 20% compared to the fourth quarter of 2023. Granted, there were a lot of other variables in play, but the lower interest rates played a key part. Now, the decline in commercial real estate lending rates over the last year has been driven by more than just the Fed rate cuts. Last year, banks were less active than usual. They were busy repairing their balance sheets and mitigating commercial real estate default risk. They needed to boost their deposits and either clear off some of their riskier loans or at least defer impending commercial real estate maturities. So banks were less active in 2024. But this year, much of that housekeeping is done, and it looks like banks may face a more lenient regulatory environment that will require lower reserves. So banks are becoming increasingly active once again. At the same time, a lot of private lending capital, mostly in the form of debt funds, has come into the real estate market. Over the last few years, as overall debt capital availability tightened, numerous investment funds shifted their focus from acquiring properties to lending to other real estate investors. These private lenders often use more lenient underwriting and don't require personal guarantees. A lot of their lending focuses on shorter-term bridge loans to help investors shore up their capital on existing assets, cover funding gaps, to refinance properties with maturing debt, or to renovate properties. In the first 3 quarters of 2025, private commercial real estate lenders raised about $24 billion of capital, up about $13 billion in the same period last year. And this increased debt liquidity has helped put downward pressure on commercial real estate lending rates. In addition, because the Fed rate outlook still suggests the Federal Reserve will continue to lower rates in 2026, fewer lenders have been keeping their lending spreads high. And this combination of increased lending liquidity, together with expectations of relatively stable or modestly falling Federal Reserve interest rates, has supported a lower commercial real estate interest rate climate. Current commercial real estate interest rates are roughly 50 basis points lower than last year. Of course, rates depend on the borrower's strength, the amount of leverage, the loan term, the asset quality and location, etc. So the rates I'm highlighting are just benchmarks. Agency debt on multifamily is running as low as the upper 4% range. Life companies are also reaching the upper 4% range on select assets. Banks are lending in the low 5% to low 6% range. CMBS debt is running in the high 5% to 7% range, and debt funds are lending in the mid 6% to mid 8% range. But basically, debt liquidity has increased and rates have come down from where they were a year ago. At the same time, cap rates remain elevated compared to where they were in 2021 and 2022, offering an increasingly positive leveraged yield climate. But no one knows how long this lower commercial real estate interest rate environment will last. At the last press conference, Chairman Powell reiterated that an additional rate cut in December is not a foregone conclusion. That pared back Wall Street's expectations of a December cut from north of 90% to about 70%, and expectations of additional cuts in 2026 have moderated. So, as has been the case, we're still in a fluid lending landscape, and there are a lot of forces in play that could move interest rates up or down, which is why investors always need to keep their eyes on the horizon.